Just mute kala.
Mute చేయండి సార్. మరి పెట్టేసి
ఇంజనీర్ గారు
మేడం చెప్పండి
సార్ ఒకసారి నరేష్ గారికి కాల్
మేడం
నరేష్ గారు జాయిన్ అయ్యారా
నరేష్ గారికి కాల్ చేయమంటారా జాయిన్ అవ్వలేదమ్మా మేడం
సార్ కాల్ చేయండి
కాల్ చేసి జాయిన్ అవ్వమన్నానా
యా ప్లీజ్ Anish sir, good evening.
Good evening, ma'am. Just I am sharing the PPT screen.
Anish sir, are you sharing the PPT screen now?
Yes. I am just sharing.
Yeah, actually, our chief guest Surya sir is also want to share a PPT.
Okay, if he will first share, then let him share.
He will first share it, sir. Okay. After his introductory, then we can share it.
Okay, madam. Okay.
Yes, sir. Thank you.
Article
So, can we start, sir?
Okay, and I'm sharing the screen.
Yes, sir. Could you please switch on your video, sir?
Yeah. Is my screen visible?
Yes, sir. Yes, sir.
Now is it visible, Andy?
Yes, sir. Yes, sir. Visible.
Okay. Shall we start the session?
We can start, sir. Please switch on your video, sir. Video.
I think while I'm sharing the screen, my video won't be.
No, sir. It will be visible. You are not visible, sir. Please start your video. That's all.
Okay.
Hello, sir.
Hello. Okay.
One second.
Okay, let us start the session.
I'm muting the remaining. Some disturbance is there. Yeah. So, good evening, dear members. Welcome to today's third session for this legal week, third day. So, past 2 days, we have a wonderful session with 2 wonderful speakers. Thank you all for continuing your presence and your interest for learning. Today we have as chief guest Sahas Surya sir. Presently he is posted at Krishnapatnam port. And we have speaker, see Anish Goyal sir from Surat. So both of you, welcome sir, welcome to Guntur branch. First of all, I would like to thank you both for immediately accepting our invitation, though it is very short period of time. Thank you so much. So I would just give a brief about Surya sir. Surya sir is a Deputy Commissioner Customs, Krishnapatnam Port Customs House. He has done his BTech Mechanical Engineering from IIT Madras, and he is a 2016 batch IRS officer and worked at Vijayawada, Guntur, Elur, CGST departments. So he is very in friendly nature. Personally, I have experienced it. So whatever the problem you have, he will immediately respond. And even when I asked for his introduction at this legal week, he said okay. And since he's currently working with the customs port, he would like to give some suggestions to the dealers as well as professionals regarding the refund issues. What are the issues that the dealers are facing, at the same time the officers are facing for not producing the proper documents. That's it. Yeah, please unmute yourself, sir.
Thank you, Bhargavi, for the introduction.
Thank you, sir. Over to you, sir.
మరి అది చూస్తూ ఉండుంటారు కదా
If
మీరు.
I'm audible,
మరి ఇతని పాపం.
so today, since I'm working in customs, I would like to discuss one important aspect which is relevant for both customs as well as GST, that is IGST refunds.
Podcast are there, no? 3 podcasts. So I remember the answers. If you open that, I can.
These are the topics I would like to discuss. Since I have very
three answers
short
are
time,
there, no? Three questions.
I'll go through the presentation quickly.
Yes, sir.
So I'll give brief introduction on IGST refunds. What are those, and how, with regard to the customs, how the IGST refund processing happens, and some of the common issues which are being faced by the exporters and the third-party suppliers in GST, and way forward, what the exporters are supposed to do in order to avoid facing issues with regard to IGST refunds.
Sure,
So
sir.
this is the overview. Let us start with the details. So what is IGST refund? To begin with, it is mainly the refund with regard to the zero-rated supplies. You all know in GST, zero-rated supplies in the exports are treated as zero-rated supplies. Zero-rated means the entire supply chain is tax-free. So the exporter, while he's exporting the goods, the tax on that goods should not be exported. So in order to avoid tax on the goods being exported, the government has provided the exporter with 2 options. He can claim the refund of IGST which has been paid on that particular goods, either by not paying the tax at the time of export, and he can claim the unutilized ITC or the ITC which has been accumulated on the inputs which were used in the manufacturing of the particular exported commodity. So that unutilized ITC he can claim as refund with the GST department, and at the time of export he can export it using LUT without payment of tax at customs. So if he is willing to claim unutilized ITC as refund, he need not pay tax at customs. So whatever accumulated ITC which he has at the ITC ledger, he can claim it as refund. And another option is he can utilize that ITC for payment of tax during the time of exports at customs, and he can claim the refund at customs. So if you want to just use the ITC for payment of tax on exports in the form of IGST, and you can do so, and you can claim the refund with the customs department. These are the 2 options available because the exports are zero rated. So the customs mainly are concerned with the second option, mainly the exports with payment of tax. So the exporters will pay the tax on the exports, and they'll claim the refund from the customs. So let us see how that process happens, the processing of the refund application at customs. So this is the process flow. To begin with, shipping bill which is filed at the time of export, that itself is treated as a refund application. And the other two aspects which are important for processing the refund is they should have closed the export general manifest. The export general manifest is filed by the liner with the customs department, declaring the details of the goods which are exported. And GSTR 3B is the return which is supposed to be filed by the exporter. So these three documents should be there for processing the refund of IGST. And to begin with, the first stage is the data of GSTR 1, GSTR 3B, or especially the GSTR 1 data will be validated at the GST network. I mean, it will be checked whether the shipping bill details and the other details are proper or not. And after validation, the GST network will transmit the GSTR 1 data to customs, that is ICAI database. And so this is the first stage. The data from GST network will be transmitted to customs database, that is the first stage. If there is any validation error at this stage itself, the data won't be moved from GST network to ICAI and the application won't be processed. So this is the first stage. And the second stage, at the customs database, that is ICAI, the GSTR1 returns data will be validated or cross-checked with the shipping bill details available with the customs database. So if there is any mismatch or error, then there will be some error code which will crop up and the refund application will not get processed further unless the error code is rectified. After validation of the GSTR1 data with the customs database, then there will be PFMS validation of the bank account details which are available with the customs. So exporter will be giving some bank account details with the customs. It will be PFMS validated. If the bank account is PFMS validated, then the amount will be deposited in the bank account of the exporter once the scroll is generated by the customs officer. So this is the process flow. So we'll see at each level what are the issues faced by the exporters. So if we go into the details of each level, so the GSTR 1 and GSTR 3B returns has to be filed. Only then the data from GST network will be sent to the customs database. And also one most important aspect is, if the cumulative amount of IGST paid in GSTR 3B or the amount paid by the taxpayer on exports in GSTR 3B, if it is less than what is being shown in GSTR 1, then also the data won't be transmitted. This is one more check available at the GST network itself. You can see why this is important, because we are saying the taxpayer, the exporter can pay tax on the exports. So he will show the exports data in GSTR 1 on how much exports he is doing, and in GSTR 3B he is supposed to pay that tax using his credit. So the tax which is being paid, if it is less than what he is showing at the time of exports, then there is some discrepancy, because he is not paying the entire amount which he is showing in showing at the time of exports. So that's why this validation has been put. So what we are supposed to check is whether the cumulative amount of IGST which is paid in GSTR 3B, if it is more than what is showing, what is being shown, the exports data shown in GSTR 1, then this validation will be through and the data will be sent to the customs database. So these two aspects are important. Next, in the customs database, that is ICAI, there are several types of error codes. We can go into details of it and it will take a lot of time. So I'll only talk about some important issues which are frequently faced by the exporters. To begin with, especially what validation happens at the customs database, the shipping bill data. The shipping bill is a bill of export which is filed by the exporter at the time of export of the goods with the customs department. So the shipping bill data, mainly the GSTI number, the shipping bill number, and the invoice number which is quoted in the shipping bill. These three.
So
So such details will be cross-checked between GSTR1 data and the shipping bill details which are available with the customs. So main issues faced are sometimes in GSTR1 the shipping bill details entered will be invalid or the numbers won't be correct. That is one major error. And also the GSTN number which is entered in the shipping bill, it is different from the GSTN using which the GSTR1 has been filed. So that case that leads to GSTN mismatch error. There can be issues with regard to invoice number also. So there is also one frequent error faced by the exporters. And the other error is the PFMS validation. The bank account which is available with the customs, that itself is being validated. It's not the GST bank account. So that also has to be cross-checked. So this is the process flow, and let us go into the common issues faced by the exporters. So there are three major aspects which I found are relevant. First one is, I think most of the exporters are rectifying this, the non-inclusion of third-party details in the shipping bill. That is one major issue. There are several common error codes which crop up during the validation process at the customs database. And the third aspect is failed after success case. This is also one major issue which is being faced by the exporters nowadays. So third-party details in shipping bill. You all know in GST there is concessional rate of duty on certain types of goods which are eventually exported. Means the goods which are supplied to exporter who exports the goods, we can pay concessional rate of duty, like for example granite or even chili, which is being supplied to an exporter. It can be rather than paying normal rate of duty, the suppliers can pay concessional rate of duty. So one important aspect which such suppliers have to note is, at the time of export, that exporter should quote the third party supplier details on this particular shipping bill. Only then it is proved that the goods which are supplied by the third party supplier are exported. That is a proof of export. So that is a validation of their choosing the concession rate of duty. So nowadays, since GST audit is happening, many third party suppliers are approaching the customs for getting NOC to get their details entered in the shipping bill. Because and one issue is, once the EGM or the export general manifest is closed by the shipping agents, the shipping bill cannot be amended. So the third party details cannot be entered in the shipping bill. So that is one issue. So we cannot amend it, only we can give no objection certificate. So to avoid such scenario, it's better you get the details of GSTIN and other invoice, third party invoice details entered in the shipping bill. That is one major issue with regard to IGST aspect. One other, these are some common errors. Mainly, I have said at the GST at the GST network stage itself, there will be validation. Some exporters, what they are doing is, instead of showing the IGST paid on exports or zero rated supplies, they are showing IGST paid on the supplies made to the other states or interstate supplies. So instead of showing the IGST amount payment at 3.1B in GSTR 3B, they're showing it at 3.1A. So such errors cannot be rectified. There are some validation errors, as I have said. The shipping bill number in GSTR1, if it is if there is any mistake in the shipping bill number, it can be rectified using Form 9. The GSTR1 has to be amended. Again, the validation will happen and the same process will continue. Similarly, if there is any invoice number mismatch, such errors can be rectified using the amendment of GSTR1. And for PFMS error issues also, you can approach the jurisdictional authorities and you can get it amended, the bank account details. Failed after success means, I have said there are 3 phases or validations which happen in the processing of IGST refunds. First at the GST network stage. After that, the data will be transmitted to the customs database. From customs database, again, it will be moved to the bank, the PFMS validation. Some cases, what happens is, after bank validation, the PFMS, the bank account will be PFMS validated, but by the time the amount reaches the bank, the account would have been closed or some error would have been happened in the bank account. Usually the account is being closed. So in such cases, the amount will not be disbursed to the exporter. It will again come back to the department. The exporter should be, they should try to identify the cases where they did not receive the amount and they should approach the department. There is a separate mechanism through which such cases has to be dealt. Nowadays, we are seeing many such cases where bank account is being closed for a temporary period by banks, and during that such time, if the amount is being processed, then it won't be deposited in the bank account of the exporter. So such cases also we should we can rectify if we approach the customs department. So way forward are the things which have to be kept in mind if you want to avoid errors. Mainly while filing GSTR1 and GSTR3B, you can check the shipping bill details at ICAI website, so that the same details, that is the shipping bill number, GST and invoice number, are entered in the GSTR1 return. That has to be ensured so that validation error won't happen at the GST network level. At the same time, we are supposed to check whether a particular shipping bill it has been processed, the IGST refund has been processed or not. For that, we need to check the status of that shipping bill. If there is any error code, appropriately we are supposed to deal the error. At the same and next, the PFMS invalid cases. Such cases also, if we are regularly monitoring the status of the shipping bill, we can see if it is PFMS invalid. Then we can approach the department and get the bank account details amended so that it will again be processed. So these are some of the things which we can follow to expedite the IGST refund process. So that's it with regard to the IGST aspect. You can refer. There is one step-by-step guide for IGST refunds. You can refer that for different types of errors which are possible during the validation process at the ICs. So how to rectify those errors, that you can see. Usually what I noticed is the exporters are not regularly monitoring the status of their shipping bills, whether they are getting the IGST refund or not. They are not monitoring. They are filing the shipping bill with payment of tax, but still they are not regularly looking into the status of the IGST refund. As soon as the EGM is closed, the refund has to be processed. So if there is any delay, you can always check the status. If it is having some error code, you can try to approach the department and get it rectified. So since this is a very complex process, unless the exporters also try to be vigilant and try to regularly monitor the status of the shipping bill, we won't be able to do it on a regular basis. So that's it from my side.
Thank you, sir. Sir, there is a query from a member. Can I read it, sir? Yeah. E-invoice is generated for export bill. They are auto-populated in GSTR1.
Okay.
But to enter the shipping bill details in GSTR1, we have to edit the export data. Kindly advise whether we can edit data or amend the export bills in next month.
Actually, export data in the sense, the shipping bill details is what you are asking, or?
Ajay Agarwal sir, you can unmute yourself and speak to sir. Shipping bill details only, sir, he's mentioning.
As I said, the shipping bill can be amended only till such time the EGM is closed. Once the EGM is, the export general manifest is filed by the liner, we cannot amend the, we cannot amend the shipping bill. So it will go into history, and we cannot amend the details of the shipping bill. Only thing we can give is by verifying the authenticity, we can give the no objection certificate. That's all from the customs side. So amendment cannot be possible.
Thank you, sir. Thank you, Surya sir. That was a nice presentation, which led us to file the refunds properly without any mistakes and get the refunds easily, which is a major task actually. Thank you so much, sir.
Thank you.
Anish Goyal sir. Sir, Anish Goyal sir is today's speaker. He's from Surat, a very knowledgeable person. Goyal sir, good evening, sir.
Yes, madam. Good evening. Good evening, sir.
Good evening.
How are you, sir?
Fine, fine, madam.
Okay, okay. We'll start the session, sir. Before that, I would ask our MC member. Hello, sir. Are you there?
Yeah.
Yes.
Yes, madam.
Brief profile of our speaker.
Okay, madam.
Over to you.
Good evening, everyone. I want to give a brief profile of today's speaker, CA Anish Goyal. Sir is a fellow member of the Institute of Chartered Accountants of India, and Sir has passed CA final examination in November 2011 batch and got All India 19th rank. Sir has more than 10 years of experience in the field of indirect taxes and have handled a number of litigations and such cases. Sir is a part of State Redressal Committee formed by GST Council for the state of Gujarat on behalf of Chartered Accountant Association, Surat. Further, Sir has the member of Indirect Tax Committee at Surat branch of WIRC of ICAI and SGCCI. Sir firm name is Goyal Rati and Associates Chartered Accountant. Sir firm has won the National Taxation Award 2021 in PIOL Awards under the category of facilitators and intermediaries. Sir has delivered. Sir has been speaker at more than 100 seminars held in the CA Institute, Study Circle, and other professional bodies. Sir is co-author of our website www.decodagegst.com, and Sir is regularly write articles for various tax websites and journals. Sir has also represented various GST issues before a group of ministries, Honorable Finance Minister and various other authorities. Sir is also represented various matters before the appellate authorities, including tribunals, settlement commissions, and advance ruling. Sir is also the member of social groups such as Yuva Sheka, Ekal, etc. With this brief profile, I will hand over the proceedings to the today's speaker, Anish Goyal, sir.
Thank you so much for my brief introduction. First of all, I would like to thank Guntur branch, Bhargaviji, for giving me this opportunity to speak on the topic of offences and penalties under GST. It was a nice presentation by DC sir, who has thrown light on the practical aspect regarding refunds. Now I will show some light if you have taken any fraudulent refund, what will happen. This will be covered in my offences and penalties presentation today. So I can start with the presentation. I have around 1 hour 30 minutes to cover my presentation. So starting with the presentation, I will cover the following aspects, the following sections, which have been allotted to me briefly in this presentation. Firstly, for levy of any penalty. So now we are discussing the offences and penalties. For levy of any penalties under the GST regime, a notice has to be issued. Department, without issuing of any notice, will directly not impose any penalty. A notice has to be issued for levy of any penalty. So a notice, say most of the demand notice has been issued under section 73 and 74 of the CGST Act. At the time of filing reply to the notice, at the time of filing reply to any notice which is received from the department for demand of any tax, interest or penalty, as a consultant, as a chartered accountant, we don't need to directly go on the merit of the case. नहीं sir, this penalty is wrong, ये penalty नहीं लगनी चाहिए मुझे, ऐसा नहीं. You should, for levy of any tax, interest or any penalty, if any notices come, don't directly jump into the merits of the case. First see whether the notice has been issued under proper section, because 73 and 74 talks about issuance of notice, but 73, 74 is only for issuing of notice and not triggering any circumstances for which the penalty has to be levied. Say example, if you have taken the ITC wrongly, if you have taken the ITC belatedly after the due date under section 16.4. 16.4, we all know the notice has to be issued, the ITC is denied if taken after the due date of filing of the annual return or September return of the succeeding financial year. So if you have taken the credit late and the credit is time barred as per section 16 subsection 4, then notice will come under section 73 or 74 as the case may be, for demanding tax, interest and penalty. But if the notice doesn't specify section 16 subsection 4, doesn't specify that the SSC has contravened section 16 subsection 4, issuance of any notice directly under section 73 and 74 without specifying 16 subsection 4 will be invalid. So on the for replying to any notice, first see whether the proper procedure for issuing that notice has been complied with or not. We all know rule 142(1)(a), which says before issuing of any show cause notice, a pre-show cause consultancy has to be given. The word shall has been treated as may from the recent amendment, but the Gujarat High Court has struck down the notices only on this point, that before issuing of show cause notice, pre-show cause consultancy was not given. So we need to check the notices that have been issued, whether the corresponding provisions where the contravention has been done by the SSC has been made out in the show cause notice properly or not. The corresponding sections when the notice has been issued under section 73 and section 74. So first thing, this needs to be checked on the validity of show cause notice. Second, as we talk about the offences and penalties, so generally the legal maxim is that actus non facit rem nisi mens sit rea. That says that for any wrongful act done by the SSC, the guilty mind is required for imposing of any penalty. Guilty mind is required for imposing of any penalty in case of wrong act done by the SSC. What we commonly called is that mens rea. That means if the person with an intention, with a guilty mind has done wrongful act, then only normally the penalties and prosecution's liability stage come. This is the basic principle for levy of penalty. Now the question, as we all know, there are two type of cases. Say criminal offense, that is the Indian Penal Code that governs the criminal offense, and the civil offense. Civil offenses, offenses of tax liability, tax not paid, these all are civil offenses. Now for all criminal offense, the element of mens rea is compulsory. For criminal offense, the element of mens rea is compulsory. Say for any prosecution under section 142 of the CGST Act, it cannot be made unless and until the commissioner has reason to prove that the tax was evaded with an guilty mind. The word evasion itself says whether the tax was evaded or the tax was late paid. What was the intention of the SSC? If the intention of the SSC is to evade tax, if the intention is of the SSC to evade tax is mens rea is proved, then only section 69 and section 132 regarding prosecution will come into picture, which takes the color of the IPC code. So for any criminal offense, mens rea is compulsory. But GST being a civil offense, if offense under GST law being a civil offense. So for levy of penalty under the civil laws, mens rea is not compulsory. So mens rea is not compulsory for levy of any penalty under the civil laws. Under civil laws, say if you have not filed your GST returns, and if we all know, if non-filing of GST is the time limit under section 47 requires late fees to be paid 100 rupees per day, which was reduced to 50 and 20 rupees per day. That is simple contravention of late filing of return, then the late fee needs to be paid. Here, there is no such element of mens rea or not. If you have delayed in filing of return, you pay the penalty and you regularize your act. So the penalty which is paid under civil law is to regularize the act of the SSC. Regularize the contravention which have been done by the SSC. So by paying penalty, the SSC regularizes his act and there is no requirement of any mens rea for levying of penalty under the civil law. The most important example is section 129 of the CGST Act. Section 129 of the CGST Act, we all know that as per the provision of section 68, the transporter needs to carry the prescribed documents. The document, the invoice, in case of supply, along with e-way bill. In case of goods sent for other than supply and the value is more than 50,000, for job work, say goods have been sent, then you need to take the delivery challan and e-way bill. So if at the time of moving of vehicle, if the vehicle is intercepted by the officer and if the document is not present, say e-way bill has not been generated, invoice is there and e-way bill was not generated, then there is no need by the department to prove that the e-way bill was not generated to evade the tax, because section 129 nowhere tells that the element of mens rea is required. So if the documentation prescribed under section 68 is not there with the transporter, say the bill is there but e-way bill is not there, then the officer will not be required to prove any mens rea or guilty mind. Straight away the penalties of section 129 will be levied. So under the normal circumstances, when there is contravention of section 129, there is no requirement to prove mens rea and straight away the penalty will be levied. In case of exceptional circumstances, say a strike ho gaya, ya road was blocked, the accident occurred, and we prove that the accident has been occurred and it was beyond the control of the SSC, then section 129 penalty issue may be litigated. But my point here is that mens rea is not required for any penalty provisions under section 129, which states that under civil offense the presence of mens rea is not required. So we have discussed an important aspect of mens rea, where on penalty for a tax or civil offense, there is no compulsory mens rea required for a penalty under civil offense. Okay. But in case where the legislature himself required. In case where the legislature itself requires to prove that guilty mind was there, that mens rea was there, then the onus to prove mens rea is on the department for levy of any penalty. The most prominent example is section 73 and section 74. The wordings of 73 and 74 are same, except in case of 74, the penalties on section 74 will be levied when there is any fraud, collusion, or willful misstatement. Not merely misstatement. The word uses willful misstatement. That means the SSC knows that he is giving wrong statement and willfully is giving wrong statement, then the mens rea needs to be proved by the department. Merely giving any incorrect statement, which the SSC don't know that I am giving the statement, it is technically incorrect, factually incorrect. In this case, section 74 will not be levied. The word uses willful misstatement. So the legislature itself under section for invoking 74 of the CGST Act requires the department to prove mens rea. So under those circumstances where the legislature itself requires mens rea to be proved by the department for levy of penalty, then the onus is on the department to prove. Practically what we are seeing, practically department in each and every case tries to say that the SSC with fraud, collusion, willful misstatement has suppressed the data and have not paid the tax without bringing out any corroborative evidence. So recently the Honorable Supreme Court in case of secondment of employees matter has held that for invoking any penalty provision, that fraud, collusion, willful misstatement, suppression with an intention to evade the payment of tax needs to be proved by the department. So whenever the word comes, such as say intentionally, negligently, knowingly, fraudulently, dishonestly, rationally, omits, lawful act, wrong act, then under those wordings that is present in the legislature, that itself requires a department to prove that the SSC has intentionally evaded a duty and the element of guilty mind, the mens rea is there. This is to be proved by the department. So now the question arises that can, for same offense, department can levy two penalties. Say section 74 states that in case of fraud, collusion, willful misstatement, 100% penalty will be levied. The same 100% penalty is also stated in section 122 subsection 2, where it says in case of fraud, collusion, and misstatement, minimum 10,000 rupees or maximum 100% penalty is levied. So for same offense, when two separate sections, section 74 and section 122 subsection 2 specified penalties, so whether for same offense, two penalties under different section can be levied. Of course, two penalties for same offense will not be levied unless and until when the additional facts come that a separate offense is also proved. We will see this in coming slides, that is, we call that principle of jeopardy or double penalty. Moving forward, regarding an important aspect in penalty is the penalty provisions, which are the present provision, which are effective and in place on the date of committing an offense. That penal provision will be applicable. So principally, say a person who was a kingpin and he has formed 4 or 5 fake GST firms, he has passed on the credit. Now section 122 subsection 1, which talks about the levy of penalty in case of fake issue of invoices, the penalty will be levied on the person who has issued the invoice, fake invoice, that is on the on the 5-7 firms, the proprietor will be penalized under section 122(1)(a), 122(1), because it talks about the levy of penalty on the person who issues a fake invoice. And the person who has formed 3-4 firms by taking the Aadhaar and PAN of this 3-4 firms owner, who may be a rickshaw driver, a small laborer, which we have practically seen that the proprietor doesn't know कि मेरे PAN card पे एक firm भी चल रहा है. So in those cases, the department, as per section 122 subsection 1, levy penalty on that rickshaw driver, yeah, on that small person who even don't know that under his name a firm is running. The kingpin who has used his PAN card and Aadhaar to get a fake firm and then issue a fake invoice, he is left by only section 122 subsection 3, where the maximum penalty is only 25,000 rupees. So to break out this lacuna in the law with effect from 1st of January 2021, section 122(1)(a) was introduced, which talked about that the person who takes the benefit out of this contravention, out of fake firms, he would be liable for penalty equal to the benefit which he have taken. So this penal provision was made effective from 1st of January 2021. So prior to that period, prior to 1st of January 2021, penalty on the kingpin under section 122(1)(a) would not be levied, because the contravention was prior to the date of implementation of the provision of section 122(1)(a). Moving forward to the theory of double jeopardy and same offense. So this theory talks about the circumstances. This theory talks about the circumstances where for same offenses, two penalty cannot be levied. The example which I gave of section 74-73, read with section 120 subsection 2, for same offenses, two penalties cannot be levied. Moving further, regarding this, we all remember service tax, the Finance Act 1994, section 76 and 78. Section 76 talked about levy of penalty in case of late payment of service tax, and section 78 also talks about levy of penalty in case of short payment of service tax. Now there were number of advance ruling, number of judgment in that part, where it was held that section 76, which talks about penalty due to late payment of service tax, and section 78, which talks about penalty due to non-payment of service tax due to suppression of value. For same offense, penalty under section 76 and 78 both cannot be levied. After number of judgment and after advance judgment by the Karnataka High Court, the law was amended that section 76 and 78 will be simultaneously cannot be levied if one is levied. But this is a perfect example where number of judgment has stated that for same offense, two penalties cannot be levied. However, when for levy of another penalty, some additional facts or evidence are required, then penalty under both sections can be levied. Say for example, an SSC has taken a fake invoice. If the SSC has taken a fake invoice, one of the offenses is falsification of books of accounts. अगर मैंने कोई fake invoice लिया है books में, then my offense will be falsification of books of accounts. And second, if I take ITC on that fake invoice, the additional evidence is that whether I have taken ITC or not. If I have taken ITC on that invoice, then the second offense which I have made is taking of ITC on invoice without receipt of goods or services. So here the department for first offense is the falsification of books of accounts, and the second offense is taking of ITC on the invoices without receiving a books of, without receiving any goods or services. Though for here there are two offenses. For that, two penalties can be levied. Second say, I have delivered goods to person X and I have received cash payment. And I have given the invoice to person Y. So in this case, selling of goods and by cash payment to person X is one offense. And the second offense is, if the department proves the second offense, that I have issued invoices only to person Y without delivering any goods or services, then in that circumstances, two penalties can be levied. So this is the theory of double jeopardy in same offense, which says for same offense, two penalties will not be levied. However, for proving another offense, if additional facts and additional evidence is required, then on the basis of that additional facts and additional evidence, separate penalties can be levied. Separate penalty for offenses can be levied. As I discussed in the earlier PPT slide, that if the words like voluntary, intentionally, negligently, knowingly, fraudulently, dishonest, rashly are present in the statute, then mens rea needs to be proved by the department. It was held in case of Commission of Sales versus Rama and Sons, General Merchant Balia. In this case, the Allahabad High Court has held the same. Further, also in case of Pepsi Foods, it was held that the department needs to prove that there is mens rea for levy of penalty, when actually there is no fraud or no suppression or no misstatement alleged by the revenue against the respondent in the show cause notice. The penalties cannot be levied under section 11 AC. 11 AC is same perimetry as section 74 of the CGST Act. So I have taken this judgment. So this is the basic principle of levy of penalty which we have discussed. The basic principle is that for levy of penalty, generally the mens rea is required where the wrongful act has been done with a guilty mind. In case of criminal offense, the mens rea is compulsory, but in case of civil offense, mens rea is not compulsory. In case of civil offense, where the legislature required mens rea needs to be present, then onus to prove that mens rea was there, it is on department and not on the SSC to prove that mens rea was there. Recently, in case of Ambika Engineering Work, day before yesterday only, I got an order where the SSC was manufacturing relaxed drum, and relaxed drum was not actually exempted from central excise because there was some wording mismatch in the tariff. Relaxed washer machine drum was exempt and not relaxed drum which the SSC was manufacturing. We proved to the Honorable Tribunal that at the time of central excise registration, when the department visited, we have shown them our product. In the verification record, in the verification report also, the judicial officer has written that relaxed drum manufactured by the SSC is exempted by this real number, and he has physically gone and checked the manufacturing process. If the superintendent, being a technical person, having knowledge of the central excise tariff and law, was not able to recognize whether it is actually exempted or not, then how can a layman? Based on that audit report, based on that verification report, the Honorable Tribunal has held, as the department was in knowledge of the activity of the SSC, there is a physical verification report of the department which says that the SSC product was exempted, then how it could be a willful misstatement or suppression on the part of the SSC. So the suppression on the part of SSC was denied as well as the show cause notice, just because the department has visited the factory premises at the time of central excise registration and they have physically checked the manufacturing process and the product of the SSC. So the element of mens rea was not present. So in this case, the Honorable Sister has held that extended period would not be invoked. So here the presence of mens rea. Today my topic is about offences and penalties, so I'm more focusing upon the penalty aspect. And if the mens rea is not present, then the extended period of section 74 will also not be present. So the demand the department can make is only 3 years from the due date of filing of return under section 73. That too, if tax and interest are paid before issuing of notice, then there will be no penalty. And in case the fraud, willful misstatement or suppression has been proved by the department, only and only on those cases, the penalties provision of section 74 will be invoked for extended period. So for normal period, we all know the November 2022, the 3 years, because 3 months time is to be given so in the by November end, the normal period of financial 17-18 will come to end. So this we have discussed in detail, the basic principles for levy of any penalty, the basic principle regarding the notices which the department should issue. Department will not stand alone basis issue notice under section 74. Proper section is to be quoted, a proper expression should be given, and what was the contravention, under which section the SSC contravened, then only the notice under section 73 or 74 as the case may be issued. For levy of late fee, I have discussed there is no mens rea required. If you have filed the return late, then penalty will be levied. The late fee will be levied. Late fee with from 1st of June 2021 up to 2.5 crore is maximum 2,000 rupees. 1 to 5 crore is 5,000. Above 5 crore 10,000. And if for nil return, the late fee is rupees 500. Moving forward to the important section 122, which is the topic for the day. Now, section 122, we all know, has been divided into 3 subsections. So 122 subsection 1, 2, and 3. It was divided into 3 subsection 1, 2, and 3, and later on 1A was introduced. So basically now effectively 4 subsections. In the 4 subsection, 122 subsection 1 talks about 21 offences, which we will discuss one by one today, and rest 9 offences are given in the other 3 subsections. Section 122 subsection 1 applies to any taxable person. Here it applies to any taxable person, whether that taxable person is registered under the GST law or not doesn't matter. So if any person who was liable to be registered under the GST law, if they are not registered, then also he will be treated as a taxable person, because he being a supplier of taxable goods or services have not registered himself under the GST law, then also the penalty under section 7 to 122 subsection 1 would be levied. So it is the 122 subsection 1, it is taxable person. For him there are 21 offences, which we will see in the coming slide. Moving forward, section 122 subsection 1A, which was introduced for levying penalties on the mastermind or kingpins who are using the other person GST number or PAN card or Aadhaar card to make fake or non-existent forms. For them, it is any person. So any person who retains the benefit of the contraventions. What are the contraventions? Contravention are who supplies goods or services without issue of invoice, जैसे cash sale, या person who issue invoices without supply of goods or services, this is fake invoicing, or person who avail or utilize ITC without receipt of goods receive नहीं किया, utilize नहीं किया और ITC avail किया, or who takes or distribute ITC in contravention of section 20, that is ISD. Input or distributor ने अगर contravention करके गलत credit distribute किया है, for them this penalties, this benefits that is taken by any person, for them penalty under section 122 subsection 1A would apply. Moving forward to section 122 subsection 2, it applies to only and only registered person. If any registered person has not paid, short paid any tax, then penalties under section 122 subsection 2 would come into picture for registered person. And again, section 122 subsection 3 talks about in any person. It is any person who abates or attempts to do any offense under the GST law, then for them the penalties under section 122 subsection 3 are prescribed. So we will see all these 4 subsections now in the coming slide. That is section 122 subsection 1, which talks about 21 offences levied on a taxable person where he is registered or not registered. Section 122 subsection 1A, which applies to the person who has taken the benefit, who retains the benefit out of the fake invoicing racket. Moving forward, section 122 subsection 2, it talks about any registered person. And lastly, 122 subsection 3 talks about. So if the notice is issued under section 122, whether it is a valid notice, say if a person has, if you have received a notice specifying that you have collected and not paid GST for 6 months, please pay penalty under section 122. Whether issuing of notice directly under section 122 is a valid notice. So under these circumstances, section 122 has more than 30 offences. So department issuing notice only specifying section 122 would not suffice. फिर तो section 1 से section 174 लिख देते. 174 sections है GST law में. So you have contravened section 1 to section 174, you are liable for penalty. So the officer need to specifically mention under which subsection, under which clause the SSC has contravened. So merely issuing section notice under section 122 without specifying the exact nature of offences, exact sub clauses, the notice would be invalid. Further, only mentioning subsection under section 122 without properly quantifying the penalty is also not valid, because under section 122 there are 2 penalties, rupees 10,000 or the tax evaded, whichever is higher. So in the show cause notice, the officer needs to state whether I propose to levy a penalty of 10,000 or I propose to levy a penalty equal to amount of tax evaded. So that proper quantification also needs to be given under the show cause notice issued under section 120. So there are 2 limbs which needs to be shown. Firstly, the nature of contravention, that needs to be specifically mentioned, and second, the quantum of the penalty, the quantification of the penalty, the exact amount of penalty which the officer proposes to levy needs to be mentioned in the show cause notice. If any of the 2 things are not properly mentioned in the show cause notice, then the show cause notice itself is bad in law and it is not giving a correct picture of the contravention done by the SSC and the nature of penalties that would be there. So I would one by one, depending upon the nature of penalty, will go into the nature of contravention and the quantum of penalties as prescribed under section 122. Firstly, let's talk about invoices. So as regard invoices, the first contravention, the first offense which is mentioned in section 122 subsection 1 clause 1, that is supply of goods or services. That is supply or goods or services without issue of invoice or issue of incorrect or false invoice. So here it is supply of goods or services either without invoice, incorrect invoice or false invoice. See, for issuing of any goods or services with an incorrect invoice, that means the invoice was issued, but the invoice was incorrect. Now, what do you mean by incorrect invoice? Can anybody from the participants share or write in a chat box? What do you mean by an invoice which is incorrect? When the invoice can be an incorrect invoice? Anybody from the chat box can mention, or anybody can unmute himself and speak. Yes, when an invoice can be said to be an incorrect invoice. Yes, no one? So I will only say, because no one is responding, that an invoice can be stated to be an incorrect invoice when the SSC has wrongly charged GST, say instead of CGST and SGST, the SSC has wrongly charged IGST. That can be an incorrect invoice where the place of supply is not mentioned, not properly determined by the SSC. The intrastate has been transitioned to the interstate, or interstate has been to the intrastate. So that can be an incorrect invoice. For supply or goods or services with an incorrect invoice, whether for this offense any mens rea is required, the department needs to prove any guilty mind. The answer is no, because it is straight away mentioned that if the SSC has supplied an incorrect invoice, instead of charging CGST and HGST, he has charged IGST or vice versa. In this case, what would be the penalty levied? So the penalty under section 122 subsection 1 is rupees 10,000 or an amount equivalent to tax evaded, tax short deducted, not deducted, short collected, ITC availed or distributed irregularly, or refund claim fraudulent. So which penalty would be levied? Rupees 10,000 penalty would be levied or amount equal to tax? Can anybody tell? See, I want this section to be a bit interactive. Yes, madam. See, I want this session to be one interactive, a bit interactive in this regard. Then only you will remember the penalties which will be levied for certain contravention.
2021-4 పేజ్ 2021-4 అది వాడు ఇచ్చింది ఆ లెక్కలో
DV Shubhlashmi madam, I request you to kindly mute.
ఇది కొత్తవి పాత బోల్డ్
Madam, kindly.
ఉంటాయి
Sir, 1 second. I'll ask everyone to mute. 1 second.
ఇది పెట్టుకోలేదంట ఇది రెన్యువల్ చేసుకోలేదంట ఆయన
Madam Devi Sublakshmi, madam, please unmute.
సార్ నాకు రెన్యూల్కి ఏమేమి కావాలి, కొత్తగా అప్లై చేయడానికి కావాలి, ఇప్పుడు 10BDకి ఏం కావాలి నాకు సార్ డ్యూటీగా అవన్నీ కనీసం ప్రాసెస్.
Sir, Anish Goyal ji, sir, please continue, sir.
Okay, okay, sir. ठीक है sir. Yes, sir. So I was talking about the penalties, section 122 subsection 1, which talks about levy of penalty due to incorrect invoice. So my question here was, if an incorrect invoice has been issued, what would be the amount of penalty? For incorrect invoice, whether the amount of penalty would be rupees 10,000 or an amount equivalent to tax evaded. So as per my opinion, here for supply of goods and services under an incorrect invoice, the example which I have given for incorrect invoice is, say, tax wrongly charged CGST instead of IGST. So under these circumstances, there was no intention to evade any tax. So if the SSC has no intention to evade the payment of duty, then amount equivalent to tax evaded, the tax evasion evaded word itself requires the SSC, requires the department to prove that the SSC with an intention to evade the tax has done this offense. So if instead of charging CGST, I have charged IGST, and the department doesn't prove that there was an intention on the part of the SSC, under those circumstances, the higher penalty, as per my opinion, would not be levied, and the maximum penalty would be the first part, that is the 10,000 rupees, which can be levied when there is no intention to evade the payment of tax. However, under circumstances when the department say there is an intention, say for example, supply of goods or services under a false invoice. A false invoice means an invoice which is not a proper invoice. You have not recorded that in the books of accounts. Only it is an invoice which is pretending to be an invoice but not an invoice. And the department proves that it is a false invoice which have been raised by the SSC, then under those circumstances, for false invoices, and here that penalty of equivalent amount will only be levied when the department proves that there was a mens rea, then only the amount equal to tax evaded would be levied. So in case of false invoices, in case of supply of goods without issue of invoice, under those circumstances, the presence of mens rea is important for levying an amount of penalty equal to tax evaded. But where there is no mens rea which is required, simply an incorrect invoice that is issued, if there is no mens rea in those circumstances, then the maximum penalty would be 10,000. Moving forward to next, that is issue of invoice without supply of goods or services. So it is plain, if I have issued an invoice without supply of goods or services, in that case, if this is with an intention to evade payment of tax, because amount equal to tax evaded, the evaded, as I already told, it includes evasion, includes mens rea to be proved by the department, then the higher penalty of equivalent to tax amount will be levied. Otherwise 10,000 would be the penalty. Moving forward, regarding invoice, that is section 122 subsection 1 clause 19, which says issue of invoice using registration number of others. See, I have issued the invoice taking GST number of other SSC. Under those circumstances also, If there is no mens rea, then 10,000. If mens rea is proved by a department, then amount equal to tax evaded, whichever is higher under those circumstances. So subsection 1, 2 and 19 can be levied on any taxable person, because it is section 122 subsection 1. It can be levied on any taxable person, and section 122 subsection 3 regarding invoice, it can be levied on any person. So any person who fails to issue invoice in accordance with the provision of this act, the penalty may extend to 25,000 rupees. Moving further to another offense, that is payment of tax, TDS or TCS collected. If I collect any amount as tax, but I fails to pay the same to the government beyond a period of 3 months from the due date of payment of tax, then section 122-128 offense has been done by the SSC. Under those circumstances, say due to financial hardship, I was not able to pay the 5 months tax. So if my payable has been properly recorded in the books of accounts, anybody can see from my books of account that my 5 months GST liability of rupees 3 crores is pending to be paid. Then if from the books of accounts straight away the amount is pending that needs to be paid, under those circumstances, what would be the penalty? So what, ek to 10,000 is there, and second it is mentioned tax not deducted, short deducted, or tax not collected or short deducted. This is not applicable because it is tax collected and not paid. It is not collected and short collected. I, being a service provider or supplier of goods or services, I need to collect tax and pay to the government. If I need to collect tax and pay to the government, I have collected but I have not paid, and it is more than 3 months, then the penalty would be rupees 10,000 if the amount is properly recorded in the books of accounts shown as yet payable and there was no intention to evade the payment of tax. If any intention is there, then only the higher penalty would be levied, and also under these circumstances. So practically, say 4 months, 5 months tax has been due and the department comes, so you can immediately ask the SSC to pay at least 2 months tax liability, and the period would come below 3 months, because section 132 regarding prosecution also states that if tax is collected but not paid or fails to pay within 3 months from the due date, then prosecution may also be launched if the amount is more than 5 crore rupees. More than 5 crores is non-billable, and below 5 crore is billable. So being a consultant, we need to guide under those to our clients that if amount is any remaining to be paid, please pay it and bring the period to less than 3 months liability needs to be paid, or the amount less than 5 crores. So under these circumstances also, as per my opinion, if the intention is proved by the government, then only the higher penalty of equivalent tax will be levied. If the intention is not proved and the books of account the amount was payable, then the penalty of rupees 10,000 can only be levied. Moving further, collects any tax in contravention of the provision of this act but fails to pay to the government beyond the period of 3 months from the due date of penalty. The similar logic will apply for subclause 3. For 3 and 4, for both the similar logic will apply. Now the subclause 5, section 122, clause 1, subclause 5, which tells about failure to deduct tax in accordance with the provision or deduct an amount which is less than the amount required to be deducted. So here it is failure to pay the tax, failure to deduct the tax in accordance with the provision, or deducts an amount which is less than the amount required to be deducted. So here an amount equal to tax evaded, this will not apply, or tax not deducted, short deducted, or tax not collected or short collected, or ITC availed of or distributed irregularly or refund wrongly claimed. So the provision will apply first one, that tax not deducted. So for this subclause 5, it is simply mentioned if tax is not deducted or short deducted, the amount equivalent to tax not deducted or short deducted penalty will be levied. There is no requirement of any mens rea here. It is not mentioned that tax is not deducted, yeah, tax is short deducted fraudulently or with an intention to evade the tax. No such word is mentioned for this offense. For this offense, the amount will always be rupees 10,000 or amount equivalent to tax failed to be deducted or failed to be collected for subclause 6. For subclause 5 and 6, the penalty is much severe because it will be always higher than rupees 10,000 or the amount not deducted or short deducted, because under the penal provision, there is no requirement of mens rea. And under the civil law, as I discussed initially in my presentation, that for levy of penalty under civil laws, always mens rea is not required unless and otherwise specifically mentioned in the statute. So this needs to be taken care that in case the SSC fails to deduct the tax according to section 51 of the CGST Act, fails to collect the tax which is applicable to e-commerce operator, or collect an amount which is less than the amount required to be collected, it applicable to e-commerce operator under section 52, under both circumstances, the penalty will be equivalent to amount failed to deducted or short deducted, failed to collect or short collected. For this, the offense will be equal to the amount of offense which has been made by the SSC. If any doubt from the participants up to this, we can take for 2-3 minutes, then we'll move forward to other subsections, because this is an important logic, an important interpretation of this section 122, which covers for both invoicing and for tax not paid, tax short deducted or not deducted, and moving other.
Sir, please continue, sir. We can take it the end of the session.
Okay.
Please.
Thank you. Moving forward to third offense, that is input tax credit. Moving forward to third offense, that is input tax credit. So for next type of offense, that is input tax credit, section 122 subsection 1 clause 7 and 9 deals about this offense. It is if any person, it is any person, any taxable person. 122(1) talks about taxable person, whether he is registered or not. If any taxable person takes or utilizes, here it is, he takes it, doesn't utilize, then also he is covered, and if he utilizes, then also he is covered. If a person takes or utilizes input tax credit without actual receipt of goods or services or both, either fully or partially, without actual receipt of goods or services or both, either fully and partially, in contravention of the provision of this act or rules made thereunder. So if any person without actual goods or receive of goods or services or both, takes or utilize, takes, doesn't utilize, only takes or utilize the ITC, then the penalty will be levied. So here there is no such, in the offense part, there is no such required of any mens rea. If bona fidely also you have taken any ITC of any invoice which have come to you without actual receipt of goods or services, then also penalty of rupees 10,000 minimum can be levied. So regarding the quantification part, it is ITC availed of or distributed irregularly. As the word irregular is mentioned here, then the required of mens rea comes into picture. A department for levy of higher penalty needs to prove that ITC was availed irregularly. Irregularly means with an intention to evade the duty, with an intention to evade the tax, this ITC was taken, then only the higher penalty would be levied, because it is ITC availed of or distributed irregularly. Moving forward, similar for input service distributor also, it is takes or distribute the input tax credit in contravention of section 20 or rules made thereunder. So if every person takes or distributed the input tax credit in contravention of section 20, then also the provision would apply. Regarding refund, it is fraudulently obtains refund of tax under this sect. So it is not mentioned as incorrectly obtains the refund. It is fraudulently. That means if you have received any refund and the refund was merely incorrect, I mean, due to technical issue, you have received a higher refund, and your intention was not to do fraud. Your intention was not to do fraud, then the subsection 7 will not apply. That means for levy of any penalty under section 122 subsection 1 clause 7 on any taxable person, the department needs to prove mens rea, because here it is fraudulently obtains refund of tax under this sect. So in quantification only of 10,000 or higher amount, this mens rea is to be proved, because it is for refund claim fraudulently. The higher amount of penalty will be levied when only mens rea is proved by the department, because under this offense, both for nature of offense, mens rea is also required, and again for quantification also for a higher penalty, the mens rea element is there, and department needs to prove that the refund has been claimed fraudulently. Regarding the records, it is falsifies or substitute the financial records or produces fake accounts or documents with an intention to evade payment of tax due under this sect. So here it is falsifies or substitute financial records or produce fake accounts or documents with an intention to evade the payment of tax due under this sect. So if any documents has been falsified or substituted, and due to which there is no effect on the tax liability, on which there is no effect of the tax liability, then section 120-110 penalty cannot be levied, because it is on the identification of offense itself. It is mentioned that falsification or substitute of financial records or fake accounts or documents with an intention to evade the payment of tax due under this sect. Moving forward, it is failure. Next is section 122(1) clause 16. It is failure to keep or maintain or retain the books of accounts or other documents in accordance with the provision of act. So if any person fails to maintain or keep the accounts or records with the above this act, then the penalty would be levied. Here the penalty would be, of course, 10,000 rupees, because due to failure to keep or maintain or retain books of accounts, there cannot be any tax evasion directly. Tax evasion quantification would not be practically there under this circumstances. So in my opinion, the maximum penalty would be 10,000. Say you are a service provider, you are a works contractor, and you are not maintaining your stock register. As per the section 35 and rules made thereunder, a stock register needs to be maintained by every works contract service provider for his separate sites. So if separate accounts, proper stock register is not maintained, under those circumstances, it is failure to keep or maintain books of accounts, and penalty can be levied. Registration. If say any person is liable to be registered under this act, but fails to obtain a registration but fails to obtain registration, then under those circumstances, the penalty would be levied. So the penalty would be 10,000 rupees, because merely for failing to take registration, there will be no quantification for tax evaded. For amount of tax that is evaded, amount of tax not paid, for that tax amount, the penalty will be levied separately under section 74 or 122 subsection 2. Here, if a person liable to registered but fails to obtain registration, the maximum penalty would be 10,000 rupees. Moving further, furnishes or fails to furnish with regard to registration particulars, either time of applying or registration or subsequently. So if any person furnish any false information with regard to any registration particulars, due to that false information, then the penalty of rupees 10,000 would be levied. Due to that false information, if any tax amount is evaded, then the maximum amount can be levied, which is practically not possible. So the maximum penalty would be 10,000. Preventing officer from discharge of duty, that is subsection 13. If any registered person, if any taxable person obstructs or prevent any officer in discharge of his duties under this act, then the penalty of 10,000 can be levied by the officer. Say officer comes in search survey and you are not cooperating with the officer, you are not giving the proper access to the premises, you are preventing or obstructing, then that taxable person would be liable for penalty under section 122 subsection 1 clause 30. Moving further to transportation of goods. If any person transports any taxable goods without cover of the documents, as the case may be specified in this behalf, if any taxable person transport any goods without proper cover of documentation, then the penalty would be levied. Here, there is no mens rea to be required in the offense quantification, in the offense identification part. So even if he had intention to evade or not, doesn't matter. The offense will be there if he transport the goods with any taxable goods without proper documentation. So the minimum penalty will be 10,000 will be levied, and if tax evasion is proved, then amount of tax evaded. Next contravention is subclause 15, which talks about suppression of his turnover. If any taxable person suppresses his turnover, which is leading to evasion of tax under this act, so the suppression of turnover must be in order to evade the tax. So here the mens rea is there in the offense identification part only, then the penalty would be levied rupees 10,000 or the tax evaded, whichever is higher. Moving further to subclause 17, which talks about furnishing of information required under this act. If any taxable person fails to furnish the information or document required for any officer, then for such failure, 10,000 penalty would be levied. There is no mens rea required. But moving further, furnishes any false information or documents. False information documents is there, then false word has to be treated as the intention to evade any tax. Mens rea would come into picture because it is false information or documents which has been furnished by the information by the taxable person under any proceeding under this act. Moving forward to offense of subsection 120 subsection 1 clause 20 and 21. 20 and 21 talks about tampers with or destroyed any material evidence or documents. If any taxable person tampers or destroyed any material evidence or documents, under those circumstances, there is no mens rea, it is required. Simple offense identification and the penalty would be levied. Similarly, in clause 21 also. It is disposes of or tampers with any goods that has been detained, seized or attached under this section. See, if any goods have been seized under section 130, detained, under those circumstances, the taxable person shall not dispose or tamper with any goods. If he has done it, then the penalty would be levied. There is no mens rea which is required. Next is supplies, transport or store any goods which is reason to believe are liable for confiscation. Here it is reason to believe. So if any person a reason to believe that he is supplying or storing any goods, then that taxable person would be liable for penalty under clause 18 of the subsection 1 of section 122. Moving forward to other offences under subsection 3. So it is section 122 subsection 3 clause B and C. Clause B and C is for any person. 122 subsection 3 is for any person who may be a registered person, not registered person, or any another third person. If any third person acquires possession or concern himself in any transporting, removing, depositing, keeping, concealing, supplying or purchasing any goods which he knows are liable for confiscation, then the penalty may extend to 25,000. Here, the maximum penalty is 25,000 the CGST, the civil 25,000 are HGST. So the maximum penalty is 50,000. So whenever the statute specifies the maximum penalty which may extend to 25,000, then it is not necessary that in each case the maximum penalty of 25,000 would be levied. The general principles for levying of penalty is governed under section 126, which we will see in the coming slide. So if any this kind of offense has been made, then maximum penalty of rupees 25,000 CGST and 25,000 in the HGST can be levied. Moving forward to attempt to commit, abet any offense of any offense under subsection 122 subsection 3 clause A for any abate, aids or abate any of the 21 offenses specified in subsection 1 of section 122. So 122(1) में जो सारे 21 offenses है, that is for any taxable person. If any third person aids or abates, then penalty can be levied on him also. That is maximum penalty of rupees 25,000. 122(1)(a) we have already discussed that any person who retains the benefit of any transaction which we have discussed, then amount equivalent to the benefit which has been retained by the person, penalty will be levied under section 122(1)(a) with effect from 1st of January 2021. Moving forward to failure to appear before officer, if any person fails to appear before the officer, before the central tax officer who has issued him a summon to appear, then the penalty may extend to rupees 25,000 maximum. Moving forward to section 122 subsection 2 clause A and B, the offense is similar to section 73 and 74 which we have discussed. The quantification here is different. The quantification is rupees 10,000 or 10% of tax due from such person. This is 10,000 or 10% of tax due against such person, whichever is higher. When the tax has been not paid, short paid, erroneously refunded, or ITC wrongly claimed and utilized, when there is no intention to evade the payment of tax. So this was section 122 subsection 2. So if any of the offences which is specified in section 122 we have seen in detail, other than this, if any offences is there for which no separate penalty has been prescribed under this act, then under section 125, the penalty may extend to 25,000 rupees. The maximum penalty may extend to 25,000 rupees under these circumstances. So, as I told, their maximum penalty is rupees 25,000. So, 1,000, 2,000, 10,000, 15,000, any quantum of penalty can be levied, which will be decided based on the principle laid down in section 126 of the CGST Act. First one, it is mentioned that no officer shall impose the penalty for any minor breach, omission or mistake. When there is any minor breach, omission and mistake, and the tax evolved is less than rupees 5,000, or when the mistake is easily rectifiable, under those circumstances, the officer shall not impose any penalty. The amount of penalty imposed must commensurate with the degree and severity of the breach. So if the breach is very severe, then only the maximum penalty of 25,000 under CGST and 25,000 SGST can be levied. But if the penalty is normal, if the offense is a normal offense, not such severe, then penalty will depend upon the quantum, the degree and severity of the breach, and the maximum penalty of 25,000 will not be levied. Of course, no person will be levied a penalty without a proper show cause notice and without a proper opportunity of giving any hearing. So the officer in the notice has to specify the proper nature of breach, the applicable laws for which the penalty has been proposed in the notice. That needs to be done by the officer. When a person voluntarily discloses the circumstances of the breach under the text to an officer, and the proper officer considered this as a mitigating factor when quantifying a penalty for that person. Agar voluntary the SSC has come, ki sir, this is the contravention which have been done, then under those circumstances, the officer may levy a minimum penalty and not the maximum penalty. So the provision of this degree and severity, the quantum of penalty, this will only apply to section 122 and section 125, or where the exact amount of penalty or exact percentage is not mentioned. So for section 73 and 74, this general principle of section 126 will not apply. Moving forward to section 127, it says if the proper officer may impose the penalty if the penalty is not covered under any of the following circumstances. So it is, if the penalty is not covered under section 62, 63, 64, 73, 74, for any of the offences for which the penalty is not covered under these sections, section 129, then a separate penalty under section 127 can be levied by the officer. Section 128 talks about the power to waive the penalty or late fee. We all know the late fee number of times has been waived by the council due to COVID restrictions and the COVID pandemic. So the government time and again has the power to waive in full or part any penalty or late fee under section 122, 123, 125 and 47, depending upon the class of taxpayer and such mitigating factors as may be specified. So up to section 128 I have covered. Section 129 is not in my presentation, so not in my topic, so I am not covering section 120 and section 130. If any participant has any doubt, then he can ask in the question and answer session. Regarding section 35 subsection 3, I have specifically covered because it specifically talks about failures to maintain accounts, failure to maintain books of accounts, or failure to maintain records. If any person fails to account for goods or services, as per section 35 subsection 1, then the proper officer has the power under section 35 subsection 6 to determine the tax payable as if such goods or services or both has been supplied by such person. So if proper accounts have not been made, then proper accounts has not been made for goods or services as specified under section 35 subsection 1, and for all that unaccounted goods or services, it will be deemed as if you have supplied those goods and services, and penalty with and tax will be demanded under section 35 subsection 6 following the procedure of section 73 and 74 as the case may be, and simultaneously section 122 will be applicable. The general provision, I am only taking that part that in subsection 13, 75 subsection 13 is the last part which I am taking, that if any penalty is levied under section 73 and 74 for the same act, for the same offense, penalty cannot be imposed on the same person under the other provision of this act. So if 73 and 74 penalty has been imposed, then section 122 subsection 2 penalty will not be imposed. It is specifically mentioned in section 75 subsection 13. So if any show cause notice is coming under section 73 and 74 and penalty is also proposed under section 122, then the SSC can bring out in the light of the officer section 75 subsection 13, where it is specifically mentioned that if penalty is imposed under section 73 and 74, then penalty on same person cannot be imposed under provision of this. This circular 76/50/2018 that came up on 31st December 2018, it talks about section 73 subsection 11. Section 73 subsection 11 talks about levy of penalty. Levy of penalty in case the self-assessed tax has not been paid within the period of 30 days from the due date. Within 30 days, if you have not paid your self-assessed tax, then penalty of 10% of the tax amount is applicable as per section 73 subsection 11. This circular 76/50/2018 came to safeguard that if the SSC voluntary before issue of notice paid the tax and interest, then the provision of section 73 will not be invoked, and only under those cases where a notice under section 73 has been issued by the officer, then only the provision of section 73(11) will be invoked. Because section 73 subsection 11 is notwithstanding anything contained in subsection 7 and 8, which talks about the penalties. So it talks about waiver of penalty in case of payment of tax up to before issuing of show cause notice or within 30 days of date of issue of show cause notice or within 30 days of date of order. But section 73(11) talks about straight away penalty under section 73 subsection 9 in case of self-assessed tax not paid within 30 days of the due date. So this circular safeguards the SSC that section 73(11) will be invoked only in cases where section 73 notice has been issued. So with regard the overall understanding which I have given in section 73, section 74 and section 122, these are general jurisprudence which we have carved out, which I have carved out depending upon the number of cases which is happened in the last years, that no penalty will be levied when the SSC when the SSC proves that it was within the knowledge of the department. The exemption which the SSC has taken is with the knowledge of the department, then no penalty can be levied. Or the situation is revenue neutral, the SSC need to pay tax under RCM, take the credit, then no penalty can be levied. When the SSC was under the bona fide belief that tax would not be leviable, and immediately on it pointed out by the department, the SSC pays the tax and interest immediately. Or when there was mass unawareness, the industry was following a method that, say for example, non-payment of service tax on provident fund received by the manpower service provider. So this was a mass unawareness issue. Under those mass awareness issues, time to time the honorable high courts and tribunals has held that in case of mass unawareness, penalty would not be levied. In case of any interpretation issues, when there are contrary judgment of separate tribunals or high courts, and on been pointed out by the SSC, the tax has been on been pointed out by the department, tax has been paid immediately. Under all these circumstances, when there is new levy or when the data was available on the records, under all these circumstances, a plea can be taken that penalty under section 73, 74, under section 122, 123 will not be levied when a mens rea is required. And under those circumstances, the mens rea is not there, can be proved by the SSC, and the penal provision will not be levied. Two judgment which I have discussed, I will quickly take in 2 minutes. The recent judgment of Honorable Madras High Court in case of Athi Hotel versus Assistant Commissioner, where the credit was only availed and not utilized. So here the court held that the SSC only availed the credit and not utilized. So there was no major intention to evade payment of tax. So a penalty of rupees 10,000 was only levied. Similarly, in case of Dell India Private Limited, this is the erstwhile service tax regime judgment, where the department has not given any evidence that the appellant has taken wrong credit with an intention to evade the payment of tax. When the department has not given any evidence, under those circumstances, the penalty can not be levied. So will not be imposed any penalty on section 78 of the Finance Act 1994 in relation to service tax. So I have quickly covered the provision of offences and penalty with the time limit provided to me. Now I would take the question and answer session from the participants.
Sir, namaste. This is Bharadwaj.
Namaste.
Sir, my question is regarding section 126, where you said that if omission or it was not intentional, we can prove that it was not intentional or a minor breach was there, then penalty cannot be levied. Is that correct?
A penalty cannot be levied only under the cases where the statute require the department to prove that for levy of penalty, mens rea is compulsory. Where there is straight away contravention and there is no mens rea required, under those circumstances, the penalty will be levied.
So we can't use it as a safeguarding umbrella.
You can't use it as a thumb rule, but you can use it depending upon the provision under which the penalty is proposed. Under section 129, you cannot tell ki sir there was a bona fide belief. If there is contravention of not taking the documents with you, then the penalty will be levied, even though there was no intention to evade the payment of tax.
Yeah, that's what I want to say. If I can't I say that it was an omission or unintentional? So
No.
not possible.
Where the
No
legislation
possible.
required, then only you can say, otherwise.
Right. And one more thing, sir, regarding the last one, which you said jurisprudence, I think.
Yes.
Where you said if what we call it as mass unawareness.
Yes.
If mass unawareness can be proved, then their department can avoid penalty. That means we can ask the department not to levy the penalty.
Yes,
right?
mass awareness with a bona fide belief.
Okay, that I accept. Is this mass unawareness can be claimed in other things also, like where RCM was not paid by a client, or where
Yes.
different
In case of import of service in the service tax regime, in
Right.
case of import of service, there are number of judgments in this regard. That being a new levy, the people was not unaware under RCM, import of service tax has to be paid. So if the SSC immediately on me pointed out a department pays the tax and interest, then the penalty would not be levied.
Okay, so for penalty, mass unawareness can be claimed.
Provided you pay the tax and interest immediately on pointed out by the department. Sir, we were not aware, you pointed out we paid tax and interest, then you can fight the case for penalty.
For difference in rate of tax in case, for example,
For difference in rate of case, if it is a classification issue, interpretation issue,
yes,
then also penalty cannot be levied.
Penalty, okay. What about tax?
Tax will be levied if
Tax has
within
to
the
be
time period under section 73, within the normal period, tax will be levied. Section 74 will not be invoked, but section 73 time limit can be invoked.
So mass unawareness cannot be claimed in case of tax payment.
In case of tax payment, also mass awareness will be for penalty and not for tax. If tax
Not
is
for
there,
tax.
that needs to be paid. Yeah.
Right, sir. Right, sir. Thank you. Thank you. Dear members, any others having questions? Sir, hope your presentation is crystal clear to everyone. It is crystal clear to me. I'm very happy for your presentation today. I think no one is having questions. Even in chat also, no one is having questions. If we are having any questions, I will forward from Guntur branch to you, sir. We are very much happy to have you today for your dynamic presentation. You covered maximum in the minimum time given. Whenever possible, we'll try to put a physical seminar with you, sir. Please try to cooperate to us.
Yeah.
Thank you, sir.
Thank you.
Thank you, sir. Thanks for coming.